Good morning, everyone. Today, our discussion is more on donors' tax under easy way to understand income and business taxation. So, this one is Module 13. So, let's start. So, what is donors' tax? So, when you say donors' tax, it imposed on the gratuitous transfer of property between two or more persons who are living at the time of the transfer. It shall apply whether the transfer is in trust or otherwise, whether the gift is direct or indirect, and whether the property is real or personal, tangible or intangible. Tax form that we are going to use for the donor's tax is BIR Form 1800, Donor's Tax Return. So what are the documentary requirements? The following requirement must be submitted upon field or office audit of the tax case before the tax clearance certificate or certificate authorizing registration can be released. So, the documentary requirements are number 1, the deed of donation. Number 2, the sworn statement of the relationship of the donor to the donee. Number 3, proof of tax credit, if applicable. Number 4, certified true copies of the original transfer condominium certificate of title, front and back of lot and or improvement donated, if applicable. Number 5, certified true copies of the latest tax declaration, front and back pages of lot and or improvement, if applicable. Number 6, certificate of no improvement issued by the assessor's office where the properties have no declared improvement, if applicable. Number 7 is the proof of valuation of share of stocks at the time of the donation, if applicable. So, for listed stocks, newspaper clippings or certification issued by the stock exchange as to the par value per share. If the donation is for unlisted stocks, latest audited financial statement of the issuing corporation with computation of the book value per share. Number 8 is the proof of valuation of other types of personal properties, if applicable. And number 9, proof of claim deductions, if applicable. Number 10 is copy of tax debit memo used as payment, if applicable. Notes: additional requirements may be requested for presentation during audit of the tax case depending upon existing audit procedures. Rate applicable shall be based on the law prevailing at the time of donation, but on different dates the donor's tax computed on the total net gifts during the year. Deadline should be within 30 days after the date of the gift or donation is made. A separate return will be filed for each gift or donation made on the different dates during the year, reflecting therein any previous net gifts made during the same calendar year. If the gift or donation involves conjugal or community property, each spouse will file separate return corresponding to his or her respective share in the conjugal or community property. This rule will also apply in the case of co-ownership over the property. Donor's tax percentage: the tax payable by a donor, whether relative or not, or stranger, for each calendar year is 6%, same with the estate tax percentage, based on the total gifts in excess of 250,000. Any contribution in cash or in kind to any candidate, political party, or coalition of parties for campaign purposes shall be governed by the election code as amended. Exemption: the donor's tax is not imposed on gifts made to or for the use of the national government or any entity created by any of its agency which is not conducted for profit, or to any political subdivision of the said government. Gifts in favor of an educational and or charitable, religious, cultural, or social welfare corporation, institution, accredited non-government organization, trust or philanthropic organization, or research institution or organization. Provided, however, that not more than 30% of said gifts are to be used by such donee for administration purposes. So let's compute. So here's the sample problem. Ella, a supervising manager of Delilah Bartolo, shares $285,000 to Cavite State University as a donation to Psychology Department for formalizing their project. Compute the donor's tax. Because the donation is for formalizing the project, there is a 6% tax after deducting the 250,000, which is exempted. So you have 285,000 minus 250,000. So it's only 35,000 multiplied by 6%. So the donor's tax to be paid to the VIR is 2,100. Okay, so let's compute the second example. Ella, a supervising manager of Delilah Bartolo, shares 285,000 to Perpetual Help Parish Church in Las Piñas as a donation to continue the construction of the church. Compute the donor's tax. So solution, nothing to be computed since it's exempted when it comes to donating to any religious and charitable institution. So this is the end of our lesson. So I'm just hoping that you understand our discussion for today and the difference between the estate tax and donor's tax.